The winter of discontent continues for Australia's retailers, with a takeover bid for David Jones ending before it even got off the ground. Late today, EB Private Equity withdrew its bid, saying the growing publicity made it difficult to proceed. That's left investors wondering whether the approach was even serious in the first place, as Neil Woolrich reports.
It's the stocktake sale that never was. The takeover bid for David Jones by a UK private equity firm has collapsed, leaving behind just a few red faces and some burnt fingers.
Frankly, no, the bid doesn't look serious. I mean, it was faxed in, the structure of it seems absurdly complicated, and the people behind it don't look credible. So no, I think the bid is gradually being revealed as something of a hoax. David
Jones shares soared as much as 20% on Friday on news the London and Luxembourg-based EB Private Equity had approached the company about a takeover. But by Monday morning, investors were growing sceptical, pushing DJ shares down 5% in early trade. By day's end, they'd lost another 5% after David Jones revealed that EB had walked away, saying recent publicity around its proposal made it difficult to proceed.
It's a mysterious bid, that's for sure.
Little is known about EB Private Equity itself. The firm's website says it's a real estate investor and developer. One news report tracked its head office to Newcastle in northern England, in between a wig shop and a noodle bar. David Jones says it's had two approaches from EB Private Equity, the most recent last week valuing the retailer at $1.6 billion, or more than $3 a share, compared to last week's price of around $2.25.
So really it's more like a 30-35% premium, which is on the high side for David Jones.
While the EB Private Equity bid is finished, it has highlighted the attraction of David Jones' flagship stores in the Melbourne and Sydney CBDs. Investors are now weighing up the possibility of David Jones undertaking a similar transaction to what Myer did in 2007, where it sold and leased back 3/4 of its Melbourne floor space and sold the rest outright to commercial developers.
There's no doubt when Myer did it, they did it at absolutely the right time. They sold off the properties at the right time and they floated the company afterwards at the right time. You would not get the same result either for the property part or the share market part if you were trying to buy David Jones at the moment.
A sale and leaseback would be the method by which you'd extract the value from David Jones. Obviously the business itself is under a lot of pressure at the moment, but with that type of sale of the property and then leasing back over the longer term, some attractive returns could be generated.
But the question now is whether there's a serious bidder out there for David Jones.
I think the David Jones brand is still very strong, and if one was to take a longer term view of the business, there's a good case to be made that it's an attractive business if done under the right terms and if the right capital structure was employed.
Frankly though, I think the whole sector's in such a terrible state in terms of a structural change in the way people shop that I'd be surprised if there were too many other rival bidders out there.
In other words, David Jones shareholders may be waiting a long time before a genuine takeover emerges.